AI Investors, March 26th edition, 2025. We're looking at market sell-off, broad sell-off in the market today. NASDAQ down 2%, Dow 0.31%, S&P 500 down 1% as the trade wars escalate. I think that this is just synchronous with the overall economic cycle that we're in. We're in a disinflationary, possibly leading to a deflationary cycle. Even though inflation is high and we have stagflation happening right now, we're still in this disinflationary environment where these trade wars, they intend to bring down essentially the inflation across items, because as prices go up, even if prices go up, less people buy those items. So they'll be forced, retailers will be forced to actually cut prices on the other hand. And the margins get squeezed. That means for all these businesses that are very sensitive to these price cuts. So a few stocks that got smoked today. One was the EBS. We were looking at that one. We had no position on it. We were watching it because there was conflicting indicators. Looks like it went down 6% today. We saw that bearish cross here where the 200 crosses the 50, and we saw a bit of a bearish follow through. So looks like doesn't look like any buy signals on this one so far. TTD, even though we caught the bottom here, it looks like we had a refill of the gap that was formed recently. Let's see what happens in the coming days. This could roll over further or it could bounce higher. So let's just take a watch at TTD in the coming, let's just say, week or so. In the general market, turning to SPY, we noted that there would be this retest most likely of the 200. Indeed, there was a retest and it failed, which is kind of a bearish signal and impending cross maybe. So we have to watch this very carefully. If this is going to be a moving average cross, that would be a bearish cross or death cross, and that would yield a sell-off, as we said in a prior video. So in a prior video, I said, yeah, we could bounce, and which we did bounce. But then I said we would potentially bounce here and come up, maybe test this 588 level, and then inevitably we would come down to maybe, let's say, this level here. So 461, there's a gap at 440. So anywhere in here, there's a couple of gaps that need to be filled. So I do see this playing out as a bumpy ride. Maybe not just an elevator straight down, but rips and dips on the way down. And that's part of my thesis, is a 2-year cycle thesis, that we're going to have kind of rip and dip scenario over the next 1 to 2 years, where we'll see a broad sell-off, where housing prices stay stubbornly high, but there'll be some realization that the prices are too high at some point as people lose their jobs, or etc., etc., and there'll be price cuts happening on housing, as there is in the South right now with the home builders. So if we look at Lennar, for example, Lennar has been a bearish case. We see that gap fill right here at 119. Looks like it filled that gap, and it looks like there's a small-ish gap at 108. That doesn't look like it was filled, but there's a little gap there at 108. So yeah, big sell-off in Lennar from 188 now down to 117. KBH. Usually when the home builders are not doing well, that's not a good thing for the overall market. You want the home builders to be going up, not down. If there is a bull case scenario in the economy, the home builders should be building more homes, not less, not having trouble selling houses, etc., if there's a healthy economy, which there is not. So that's contrary to the mainstream media telling you everything is fine, just buy AI and everything will be okay. No, that's not what we're seeing here. We're seeing that KBH is going to probably fall most likely, and you have some probabilities here. Well, it could bounce up and down, sure, but overall the trend is down. There's a trend down to 47 on KBH. We see huge distribution happening in KBH. In fact, the distribution is right around here, which is 36 on KBH. So it's got a while to go. Almost looks like a head and shoulders pattern happening up here, but a larger head and shoulders happening up here. So looks like multiple head and shoulders. So we have a head and shoulders up here, but then we also have a head and shoulders happening more broadly speaking if we look at a bigger picture. So very bearish in the home builder space, which is not a good indicator. Doesn't bode well for the overall economy. It is a good indicator to gauge the economy by, and the indicator is pointing to be negative. UPS marginally up after a huge sell-off. We had USO marginally up. Let's check out Costco marginally down. SMH was one we were talking about before. We noted that there could be a bounce, and indeed there was a bounce. We saw that bounce, and I said it would hit resistance between 220 and 232. Indeed, we got that. And then we got the sell-off, the gap fill. Let's see what happens here in the coming week or so. I do think we're headed down overall. I think that unless there's something that changes, we're in for a bit of a bumpy ride, and this could certainly fall with the Qs and with SPY. So I'm looking for roughly for the Qs and for SPY, I'm looking for that gap to be filled. There's this gap here, right? For the Qs at 377. I'm looking for that gap to be filled in the next maybe year or so, which represents roughly speaking a 20% decline from where we are today, and probably like a 30% decline or so from all-time highs, which would mark kind of a similar decline that we saw in 2022, and we saw that kind of go from 400 down to 250. So, which is about a 30% decline more or less. So I expect something similar to be happening here. It'll certainly scare a lot of people in the market, and people will be flocking to assets like gold, which will drive up the price of those quote-unquote safe haven assets, but they're not really safe haven assets. We see that in the crash of 08-09, for example, we saw that gold did go down. So it's not really a safe haven in times of crashes necessarily. We saw 08-09, you see it goes from 100, the GLD, down to 65 or so, so about 35% haircut, even in the crisis here. But so I'd expect something similar here, so maybe a 30% haircut or so. Maybe it'll bring us right back down to the 200 level. So that's where I see gold heading maybe in the next year or so. Maybe it'll top out a little higher. The GLD will go a little bit, push up a little bit more, but overall, it's kind of a bearish sentiment in the market right now. Yeah, there's some argument that people are trying to make that the PE ratios, NVIDIA are fine. Everything is fine in the AI space. But, the technicals are not agreeing with that. So the technicals don't agree. The probability for NVIDIA is to the downside. We see that bearish MACD cross here. We see RSI coming off. We see some distribution happening. I do wonder what's next over here in the graph, because we do see the bearish cross here. Do we drop down to the 50 level for NVIDIA is at the next step here. You know, of course, there's going to be noise here. It's not an elevator. There's some noise in here, so we're looking at not a tradable just elevator straight down, but kind of like a 1 year-ish horizon that was general market weakness will spill from consumer centric and consumer discretionary stocks like EL and etc. into the more broad market, and that's kind of my thesis and for the next year or so. I'm not loving this chart at all. In fact, I like EL's chart better because it already hit almost like all-time lows here. I mean, yeah, inflation adjusted. We're really sitting at 2012 levels, and we do see possibly a bullish MACD cross here. So something to keep in mind, you know, in the future. Keep on your watch list this EL. I do think that something's got to give here. It's either we're going straight down to like 30 or something, or we're going to retest this 120 level. But yeah, I want to see what the price action does as soon as this gets crossed, which looks to be very, very soon. Now, thing about EL is that they're centered mainly around China. So if China starts to turn around or anything, this will head higher. But and if you look at the China stocks today, the actual relative strength was there. You know, BABA sold off marginally, I would say. You see a very bullish MACD overall. You have this bullish MACD cross here. Everything from like a 5-year standpoint looks pretty bullish. Impending golden cross here. This might be a little bit short-term bearish, but this cross is a good one if it tends to happen. Also, we're seeing it went up 0.3%. Some relative strength here. So in the Chinese names, there's some relative strength. Something to note, kind of a hideout. TLT, also a hideout, went down marginally today. Yeah, so as people flock to safety, at some point, this is an bottoming process. At some point, we're going to see this shoot up, but it's just a matter of wait and see. Can you get this TLT for cheaper? If you can, grab some TLT. I think in the long term, you'll be very pleased because the Fed is likely to be forced to cut rates as the economy slows from these external shocks that we're experiencing, and also just the interior fundamentals of the market are starting to decline. So yeah, we're seeing several things start to shift this pattern from a bearish pattern, which we already had, to a bullish pattern, which we are not seeing yet, but there's definitely a base forming in here. So something definitely to watch out for. So that's all for today. Just wanted a quick market update for everybody. Like, subscribe, comment, and I'll see you tomorrow. Let the market be with you. Take care.